Good morning. This is Mark Sebastian, founder of OptionPit.com with the AM Volatility Report. Reminder, this is for educational purposes only. None of this should be construed as investment advice. Options have risk. Consult your financial professional. Hey, don't forget, coming up in 12 days, maximizing profits with weekly options. Go to OptionPit.com/weeklies or our events page to sign up. Just $147. That's half off. And still $100 less than buying the recording, and you get to see it live. So think about that, and you keep the recordings. Go to optionpit.com/weeklies. Well, you can see here we are. The market is up. Things are going great. The world is our oyster. The S&P is up about 7. The VVIX is in after a nice run. The VIX Mo is actually down, and that's what August is going to expire into. And vol futures are down significantly. There's a lot of pressure on August, September, October, kind of across the board. Vol futures are down. You can see, you know, every so often I get a question about this. Why is the VIX up when on Monday, you know, the market's up? There's this thing called weekend effect that you have to be aware of. On Fridays, VIX tends to soften, and then it tends to rally on Mondays. So when we're coming on a Monday and VIX is only up 0.12, in my head, that is a VIX that is down. It is getting murdered for the weekend effect. And that's really what the big driver is. Looking across the spectrum, you can see Apple up again, looking like it's going to run higher. Facebook down again. It's been really rangy. But yeah, Apple down, or Apple up nicely. Google pretty flat. Amazon down. So Apple really the big mover and shaker. We continue to really like calls in Apple when strategically placed, especially around the September timeframe. We think volatility has just been too cheap in this September. We like the 109 and 110 calls because of all the open interest in September, where there's just massive short strikes at the 105s and 110s. We also see something similar in SPY. We think SPY is in grave danger of a short squeeze if it starts to break 220. All right, and why? Well, take a look at the strike open interest in relative terms on the 220s and the 225s in September, and really the 230s. If those start to move, if we start to get a big rally in SPY through that 220, it could cause a lot of short covering and a lot of people being forced to buy up those strikes or buy up the stock to not lose their SPY stock. The cash index has something similar, although you don't. The nice thing is it settles into cash, so you don't actually lose your S&P exposure. Nice move out of some of the banks today. And I do want to point out that TLT bonds are down. Even with gold up. Weird trading around gold. Gold's been super wonky and, you know, not held usual patterns. Some strength in oil today. We like that. Oil has seemed to have found a bottom back around in between, you know, 45, 50 range. So it doesn't look like it's going to 30 anytime soon, even with us entering the winter season. On the day, I think we set up for SPX to meander higher. I think we could be up 9 or 10. Most of our move has been on Mondays for the week. And we may continue to see that pattern here today, folks, unless we get some news that's going to change things. Otherwise, I'd be looking for more boring. And in terms of trade setups I'm watching, I'm really going to be watching SPY to 20 calls. That's going to be the big play I'm paying attention to. I'm also looking at, some of the pieces in VIX. I do like the AUG 12 puts expiring Wednesdays as a potential short overnight play. And that is the story. All right, folks, if you have questions, you can email me, marketoptionpit.com. You can call me 888-TRADE-01. And don't forget to check out our weekly trade. Have a good one.